Welcome to our channel. If you want to maximize health savings accounts or flexible spending accounts, follow these step-by-step instructions to cover medical costs tax-free. Step 1. Understand the difference between HSAs and FSAs. HSAs belong to you and roll over annually, while FSAs are employer-owned with use it or lose it rules. Step 2. Determine if you're eligible for an HSA. You must be enrolled in a high-deductible health plan, not covered by other health insurance, and not claimed as a dependent. Step 3. Open an HSA through your employer or a bank if eligible. Choose a provider with low fees and good investment options if you plan to save long-term. Step 4. Contribute pre-tax dollars up to the annual limit. For 2025, individuals can contribute up to $4,300 and families up to $8,550 with an extra $1,000 if you're 55 or older. Step 5. Understand what expenses qualify for HSA and FSA funds. Eligible expenses include deductibles, copays, prescriptions, dental and vision care, and many over-the-counter items. Step 6. Save receipts for all purchases made with your HSA or FSA card. You may need to prove expenses were qualified if questioned by the IRS or your account administrator. Step 7. Consider letting your HSA balance grow as a retirement savings tool. Unlike FSAs, HSA funds never expire and can be invested to grow tax-free for future healthcare costs. Step 8. Submit claims for reimbursement if you paid out of pocket for eligible expenses. You can reimburse yourself from your HSA or FSA at any time with proper documentation. Don't forget to like this video and subscribe to our channel.